Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, October 17th. I hope you guys had a wonderful weekend. We just got a couple items here on the docket, and we'll start off with the manufacturing in the New York region, which is also known as the Empire State Index. This index, as you can see here, we had September was -2, and it contracted again. It went down a little bit further in the month of October at -6.8. Also on the docket are industrial production. So back in August, we had a -0.5%, and it was supposed to go up 0.1%, and it came in expectation of 0.1%. So a little bit better news right there. And then capacity utilization for the month of September. So we had August at 75.3. It was supposed to go up to 75.5%, and it came in between that at 75.4. Not quite to expectations, but a little higher than the previous month. So obviously not the greatest of numbers. The big number in this today would be the Empire State Index, which is our manufacturing. So the other ones are just more moderate type of impact in where the economy would be at. Right now, the stock market's down. It still, of course, didn't like the manufacturing today, but it's also taking its cue from Janet Yellen's comments last Friday, basically saying that maybe she does see a point of the economy maybe slipping a little bit, U.S. economy slipping a little bit. This was on the heels earlier in the week of China coming out with some negative, economic data. And then, of course, we have earnings reports. We had some that weren't so good. We had financials like the big banks all came in with good numbers, including, say, Bank of America. After the bell today, we'll have Tesla as well as Netflix giving out their numbers. We'll have to kind of wait and see if that has any impact on the bond market tomorrow. But again, it's starting to kind of feel a little bit negative in the stock market now. With things are slipping a little bit, and potentially the Fed may be raising rates. But she did sound like she might be holding off on that, maybe even raise that target, 2% inflation target. So that's something I believe we're going to need to kind of be, as a consumer, want to be kind of worried about, because again, as those hawkish Feds were talking about before, we're saying that we need to raise rates regardless, because it's kind of looking like the 70s all over again. We don't want that. We don't want the prolonged recession or force ourselves into recession and stuff. So hopefully they do at least raise it 0.25% later this year, maybe by December or so. All right, let's take a look at the bond market. So we did settle a little bit under the floor here, and today we're up about 16 basis points, so that it gives us better pricing for where we left off on Friday here. Still well below the 10-day moving average, 100-day moving average. You got the 25-day moving day average and the 50-day moving average. So this is going to be a little tough with all these averages up in this direction while we're down here. So again, but the good part is that we did start up higher than where we left off yesterday. So again, if we can get this continuing upwards, we'll have to kind of wait and see. Again, this 10-day moving average gets lower. We haven't really broke above it. It could potentially put us even further down the side here. All right, so be cautious, guys. If you guys are floating any interest rates, if you guys are trying to time the market and everything. So we may not see this level here for a while. Maybe not until December after the Fed do the rates, make a rate hike or something. But again, right now things are getting pushed lower, which basically means rates are going up right now. All right, you guys have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. If you guys like to get more updates throughout the day, follow me at Mike Bjork on Twitter, and which is MikeBjork, and you guys will get daily updates throughout the day. All right, have a good day. Bye-bye.